Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, which ended yesterday in a pretty bad note. There's a lot of concerns over potential trade wars, persistent inflation, and uncertain economic policies. Despite some positive economic data points, the overall sentiment is pretty negative due to looming threats, tariffs. So basically, the only positive signals that I can highlight are the stronger than expected GDP in Japan and positive New York Fed manufacturing. But these are basically low rating, low scores, and the general sentiment is focused on the economic data based on Michigan inflationary pressures, the 5-year inflation expectations. As you can see here, it's pretty negative, going from 3.3 to 3.5 and 4.3 on the previous one, staying on the 1-year inflation. This is final. So these are final readings that express long-term inflation expectations, and these are pretty bad. But also on top of that, the Fed is also expressing caution about inflation, emphasizing the need to more progress before considering move any cuts. Concerns about policy changes that Trump is threatening, their impact on the economy, basically a lot of headwinds from potential trade wars, persistent inflation, and geopolitical risk. One good note is that there's progress in the peace, in the deals between the Russia and Ukraine. US is putting a lot of pressure on top of Ukraine, so there might be a deal. So that geopolitical risk might be lower, but there are certainly other risks that we need to consider. And those are pretty right now focused on trade wars. Basically, what we have here, apart from the economic data, is a market that is really waiting for a correction. So the initial jobs claim were pretty negative. The housing market index is pushing lower, weakening confidence on home builders, cooling housing market. That would be good for inflation, but we right now are focusing on growth. Remember that Trump offered this kind of narrative during the election. We are US first, US corporate first. And this is good for growth inside the country, inside US, but there's a lot of pressure on other countries that are putting pressure on US companies. So if you are putting pressure on technological companies in your country, I'm gonna put stress on you with tariffs. And that kind of narrative, it's increasing. And week after week, we are seeing more and more pressure on trade wars. So basically, there's a lot of geopolitical sentiment. There's this kind of Europe versus US going on right now, and that on top of higher than expected inflation and the negative that the Fed central bank is prepared to maintain policies at the rate that they are not going to support right now. They are pretty independent from the president. So they are not going to support the market by lowering rates. So at some point, the market has to correct. At some point, this optimism that we got in the last couple of days, this has to vanish. And that happened yesterday. Why? Because the weekend is right now. The weekend poses a lot of uncertainty on investors, and portfolios need to be controlled. And when they decide to just bail off their positions or at least reduce the exposure, you find this kind of days like yesterday. That is sell. A lot of pressure. And I put a lot of sentiment onto that to finally bring that home on that 30, 35 scoring that is I propose. So these kind of things, even though Walmart, for example, had a little bit of EPS increase, but the outlook is what is putting more pressure on. Next week, we have Nvidia on Wednesday. So that's going to be pretty huge. But I don't think that this is going to change a lot of the sentiment market because right now we are less optimistic. We have less optimistic outlook for the US stock market, 5-year inflation, the forecast, the 1-year inflation, Trump tariffs, the Fed acknowledging. I mean, there's a lot of negative catalysts that are going on right now. So let's move into the charts. And the first thing that I would like to show you is the market internals that really show you how the market reacted to, in terms of volume, to how the week. So the left hand side, we have, let's start with the S&P. We have Monday, Tuesday, Thursday, and Friday. And as you can see, we were pretty balanced. But then look at Friday. Friday, in terms of volume, is huge to the downside. And we ended on the lows. That's a strong signal of strong selling pressure and really lackluster buyers. If we move to the advanced decliners, we can see that basically the same thing. We started pretty good, then we established a little bit lower, but then on Friday, from here down to the bottom, everything was moving down, not only on the S&Ps. We can see that also on the Qs. The Qs, we see this strong selling and this strong decline. Friday was spectacular, -2%. And as you can see, this bullish fair value gap on the daily got destroyed to the downside. So there's all this liquidity that I'm targeting right now. Starting from the daily, things are looking pretty bad. You can see there's a lot of red on metals, a lot of red on tech. Tesla was -5.68, Nvidia -4%. I mean, in terms of sectors, there was also a lot of pain after pain. Banks all in the red, all in the red. Yields are pushing. The RSP got destroyed with -1.40. The mover, look at these moves onto the daily moving average. Look at this. Everything was sell after, and you don't see this. You don't usually see this. This is a very rare positioning on the market. This is very extreme pressure to the downside that at some point is going to continue. This is just not a pullback. I think this is the start of something else. So let's analyze this in detail, because I was ready for the market to really push into all-time highs. I told you that this week, but I can always get things wrong. And that's the key of the market. You have to adapt to the market and see the price action. Price action is key. We can analyze, we can be prepared, we can have our strategies, our setup, but price action and risk management are 100% your best skills to have, because sometimes you have things like this. This is a 1 hour chart, and we have 1, 4, 5, 7, 8 hours of straight selling, selling, and selling. Market was 568 points in the red. So that it's pretty clear that this is not just a little bit of pull. This is just something else that we might consider, and I think bears and sellers are going to continue pressuring down until they find either a good psychological level or a good level for adding to their portfolios, or they are going to just hunt liquidity for a bigger catalyst. So that's my strategy for next week. Looking for real obvious, really obvious uh, zones of liquidity. And we've been bouncing of this daily fair value gap for the framing here. So we've been basically bouncing of this daily fair value gap for, I mean, that's for 120. That's almost 4 months of bouncing on. So we might be distribution, who knows? But I'm really targeting this liquid at 20,600. I think all these downside, all this liquidity finally is going to be destroyed at some point. All these, I can remove this, I can remove that. There's a new week opening up here. We have certain real obvious things. The first target is 21,500 at the level of the new week opening gap. Then we have another zone of liquidity. We have this that was last week lows, this week's low. And now we have then the quadrants on this week. But certainly, I'm looking to more downside. This is not your typical pullback. Might look like a bigger correction. We have a strong pivot here that we can also deploy. We can remove. We have our two zones, intra 15-minute resistance that are gone. Then we have this daily. This daily is pretty crucial. We might see some kind of bounce into the imbalance or a bounce daily and then straight down. So I'm looking for lower highs and we might see some opportunity. But what is true is that the sentiment is pretty dead, pretty red. Let me just resume again with a good framing. The Russell minus 3%. High yield corporate bonds, yields, dollar are correlation with that. Yields are being destroyed. The 10-year being destroyed is not good. The 2-year is pretty good, but the yields are showing you a lot of uncertainty. A lot of metals are in the red. Use Tesla minus 4%, Nvidia minus 4%. And look at the sectors. We have staples in the green 1.20%. That's a defensive utilities, defensive sector. Banks all in the red. Semis red. And as I told you, moving averages. I mean, there's a clear, yesterday was a very clear message markets. We are afraid of a lot of things. And we are just liquidating positions, waiting for better catalysts, for some situations to improve. So how can we take advantage of that? Well, the first thing that I told you is that we need to wait for some kind of support. And honestly, I'm, let me just show you, I'm waiting for all this zone to be, so I'm waiting for, honestly, minus 4% low. And as you can see here, we have this line. This line is the 200 moving average. That's a pretty good zone that it's converging with our sell side liquidity here that we got on the daily. So at some point, we might see the market move towards that, and then big investors, as they did in here, they couldn't have that. Have here, you can see the 200 moving average is pretty good, and then we have the anchor VWAP that is also down here. We were pretty extended, but there's still a big trend going on. You can see we are here with a lot of uncertainty and a lot of fear, a lot of things. That's why we are being corrected. But I don't think this market is recession. I don't think huge pain. But momentarily, we are going to see some kind of distribution to the downside, waiting for better catalysts and waiting for better positions to attack price. Maybe in 1 month, maybe in 2 months. But I'm pretty sure that the market is going to find some big buyers at the 200 moving average at this of 20,000. So until then, there's a lot of space. Be really careful. The first thing I will be watching is week opening gap and the sell side liquidity around here. 22,000s got destroyed. Excuse me. 22,000s were destroyed. We are going through that like a knife. The daily volume imbalance, we may see some kind of pullback, but I'm really waiting for this zone to maybe find some intraday trades to the long side. So until then, I hope you stay afloat. I hope you didn't get destroyed on Friday. That was a pretty clear, let me go 15 minutes since the start until this zone. As you can see, we found some buyers here, but then it was reckless. It was really reckless. Run away, 15-minute fair value gap, and we have this entry to the downside. I don't want to short this market because I was expecting something else. I was prepared for something, but I don't want to take riskier positions Fridays. Pretty clear message from the markets, and we have to really study what happens next week. Be really, really careful. And that's all from my side. As always, if you found this video useful, please give it a like, subscribe to the channel. I upload these weekly recaps every Saturday, which we go through everything that I'm able to throw at you. So take advantage of these videos. They are free. They are free. So if you like this channel, subscribe, support my job, my work, and if you like this analysis, welcome to the channel. Also, from Monday through Friday, I upload also daily videos for market forecasts, market updates, and market recaps. So thank you everyone for the support. Thank you for your messages, and I hope you didn't get destroyed yesterday. Hope you manage your risk. Remember, discipline and patience are key for your success. Stay safe, everyone. Have a nice weekend, and see you on Monday.